silver tends to outperform gold at the end. And I don't think we're at the end. So could it go to 16 to 1? Yes, it could. And if you sold, everything at 33 to 1 and silver doubled from there, you'd be upset with, me telling you to sell or whatever. But nonetheless, the way I planned it, a projected move to a certain amount. And what you do on the way up, because the last thing you want to do, first of all, to pick the top is an amateur's game. I've done it, call it luck, skill, or a combination thereof. I don't expect I could do it again. But if silver goes to 100 and you start filtering out at 75, and then it gets to 85 and you sell some more, and let's say it gets to 90 and it never gets to 100. Well, you have to have a plan on the way down, because you don't want it to go from 50 to 90 and back to 50, and you rode it all the way up. You're fine. You're one of those people that bought it at, near 50 and held it forever. And you watch it go to 50, you watch it go all the way near 100, and it came all the way back to your round trip, and you've paid the pain of holding it for 20 years or 50 years or whatever it is. You don't do that. Yeah, you're trading it for fiat. Well, take that fiat and put it in something else, So I just want to make that point. So I've got two plans. I've already given it to my members on a video. I do videos during the week and just kind of update them, because I work for them. And there's so much stuff. I know I'm talking rapidly today, Daniela, but you also know there's just stuff flooding in. They've got this AI guy that's the Asian AG guy. And
a lot of that to us. What is that?
Well, it's an AI. And it's well done. And what's interesting about it is about 80% of it's the truth and about 20% is totally complete BS. And I'm doing another show that we're going to go into great detail of some of the quotes that this guy used. And what's interesting, in one of these videos, he quoted some of the subsets of the CME's regulations.
Yeah.
And he actually quoted one that's correct number. But what he said about it is absolutely ridiculous. It has nothing to do with what he said it was. And so there's a lot of that going on. So you just have to be careful.
I just can't believe how big that has become, I think is, but wait, I want to come back to the CME, but I just want to highlight what you said there. You need a plan on the way down.
That's the point. Everyone thinks about, I got to sell at the top. But what if the top isn't 100? What if the top is, 200? You have to have a plan to exit with a profit. I mean, what's the point? Now, most of my followers, and I'm in this kind of the same mindset, is, well, if I sell silver, where do I go to? I don't trust the dollar, right? And that's a tough one to answer, but you can go into a hard asset. You could go into real estate. Yeah, but real estate's overpriced. Okay. You could go into the stock market. Yeah, but stock market's overpriced. So it's difficult, but still, you've got to take a profit. Even if you move it into the bank and keep it in fiat for a while, it's not going to disintegrate in one day unless you have a bank failure and it close the banks and, it's all over. And I don't see that happening, at least not for some much longer period of time. So you got to be reasonable. Your expectations, I think, need to be reasonable, and your exit strategy needs to be reasonable. There's nothing saying that you have to sell everything at the top. And the main thing, again, and it bears repeating, is do not take a ride from 50 to 150 back down to 50. Sell some on the way up. And if it starts to reverse, you've got to continue to lock your profits in. And that, again, is what I've outlined. I'm putting it in the report. I'm going to make it PDFs again so people can, print them out and laminate them. Stick them on their bulletin board or tape them to their dashboard, or be trying to be funny, but they've got a plan.
Yeah,
and it's a guideline.
Of course.
David said 75, it's got to be, 75 is a guideline. I'm not going until 80 or 70 is good enough for me, or whatever the case may be.
Right. Yeah, because it's a lot of fun riding it up. Everyone's having a good time, right?
Right.
Until we're not. So that's really sound. Okay, on the topic of the CME, there's a lot of, in the underground, voices saying, well, the CME keeps raising margin requirements, and that's why we keep seeing these kind of like smackdowns in silver price. Any truth there, David, or are you hearing anything? Or
Yeah, no, that's true. I'll interrupt you. I mean, it's very, very common in the futures markets, all of them, that if things get out of control, the exchange will increase margin requirements and flush out the weaker hands that don't have the cash available to meet the increased margin requirements. And that happened in the palladium market years ago. I'd have to look. I was much younger at the time, but believe it or not, in the palladium market, when it really took off because it was physically driven, what happened in palladium was it was a really decent price. It was a much lower price than platinum. Ford Motor decided to switch their catalytic converters from platinum to palladium. It was a cheaper way to go. So they just, called up and said, look, we're going to buy this much palladium. Like, what? We don't, that doesn't exist. And it did, but barely. And I'm exaggerating it a bit, but the palladium market just took off. So what happened was margin requirements got lifted and lifted and lifted. And at the top of the market, you had to put up 2 times the cash price to keep a futures position, which is ridiculous. So yes, it does take place. Yes, there's a reason for it. I'm not going to evaluate whether it's right or wrong. You can make up your own mind.
I think it's interesting how we have this narrative here happening in North America and a completely different story happening in Asia. Physical silver prices in Asia, especially on the Shanghai exchange, have been trading at huge premiums, sometimes $8 over global spot. What does this tell us about real physical demand versus the paper markets here in North America, David?
Well, it indicates that there is an arbitrage opportunity. I mean, anyone that owns physical silver could, in theory, ship it over to Shanghai and make a huge premium. The problem is how much of that's, could actually be accomplished. And that's where, no, I don't think anyone has a real answer. I'm sure people that are, metals dealers will know. But as that opportunity unfolds, and if it's real, then those arbitrage opportunities don't last very long. In other words, if it could be done, and I'm not saying it can't, that gap would close pretty quickly. And since it's not closed on the physical end, it's closed more or less on the paper side, then that brings into question what's really going on. And I suspect that there's more hype in the market than that we need. There's a lot of misinformation and what the true allocations are. We do know for a fact that the amount of silver on the retail side has been net sellers even now. So there's refiners that are backed up that are only taking $9.99 buying silver. They will not take, silver coin because it takes a longer time to refine it. What's being taken into the refiners is being produced into 1,000-ounce bars, good delivery bars for the CME and the LBMA and for Shanghai. And so there's a bit of a backlog there. So will we get equilibrium? And the answer is, I don't know. I suspect that we will. And what will that look like? On the other hand, silver can do things outside of almost anyone's expectations, and even mine. So we could get in a situation where, let's say the Asian markets, India and China, both continue to buy on a monumental basis for both industry and investment, and the demand can't be met. So I'm not ruling out either case. What I am suggesting is that this arbitrage opportunity, I think, is more theoretical than realistic because they don't last very long. It's this will close again from the paper side. I'm suspect of what's really going on.
Nice. Yep. One more point I want to get in here, ties in here, because China is implementing export restrictions on refined silver starting Jan 1st, requiring licenses and effectively limiting supply from the world's dominant refiner. How significant is this for global silver availability, David? And could it trigger an even bigger squeeze?
No, it's way, way overblown. What is misunderstood is that the market, or some people in the market, thinks that it means that all silver will not be exiting China. That's far from what it says. What's going into effect is a license that's required to export silver. So it's kind of a one-off case. It's smaller than the perception out in the blogosphere. So if you are someone that's exporting silver out of China to India, as an example, and you're doing it right now, what I'll call the black market or the free market, how you want to term it, then now they're going to try to license, China's going to try to license everyone that is exporting silver, and there will be restrictions on it. So they're going to better handle on what is leaving China, but it's not closing it down. It's not stopping it. It's nothing like that. Don Durrett, I think, addressed this, and he's pretty well known on X and other platforms, and others have. A lot of the stuff is getting, especially new silver investors or even old ones, have been in the silver position for a long time, and they're just really, fatigued because they've waited for so long. And here we've got a lot of enthusiasm, a lot of movement, a lot of momentum, and every little piece of information, true or false, gets them overly excited and puts it in a context that is really unrealistic. So yes, the licensing will take place. That's a fact. Will it have a huge impact on the market? It will not.